Could the ES be setting up as a secondary short on the 5-minute? Well, I was wanting to talk about how this was looking like a potential swing buy above here. So potential swing buy there. The idea of a secondary short, so we'd have a, depends how you look at it. I mean, I would read it as like this being the first short, first entry, pullback, and your second entry would be basically below this bull bar or below this bear bar, but this bear bar hasn't triggered. So, as the market moves forward, this would be like the first low here. So low, first entry short, pullback. Then, so you're thinking of like a second entry short would be below a bear bar here. So I think that'd be okay for a swing short. So what the market is trying to do here is it's trying to find a way to break out. It's like I was talking about, like this bull bar was like a swing buy above that. If we get a bear bar closing near its low here, then there would also be a swing short below that. So the market is trying to find a breakout of this range. When we have these big bars like this, and you're starting to get big bars that are closing like near their extremes. So like this bull bar closed near its high. So it's a breakout mode pattern. The market is it's trying to find a direction here to break out of. The issue though is like what I was saying was I don't think any moves are going to go too far before reversing. So yeah, it's like if this bar closes near its low, that would be a second entry short. It would be a swing short, and like I said, my concern is I think you need to go for large profits, but I don't think breakouts will go too far today. I think we're going to have bad follow through on breakouts, so that decreases the chance that your swing is going to be able to get enough profit for you. So we have this bear channel. When you break out of the bottom of a bear channel, you expect to also break out of the top. So we poke through it like this. And I was talking about it through here, how 75% of the time when you break out below the bear channel, you will try to break out above the top of it. So that's what's happening now. So I will be looking for some short scalps here. I'm gonna trade. I'm gonna trade very small. Sometimes people ask um, what is like the number one most important thing in trading? And of course, I mean, I get that. Of course, they want like, okay, what is the best piece of advice you can give me right now? And really depending on what's on my mind or what my mood is, that answer is going to be different. And if I had to answer that right now, it would be that understanding what market you're in is the most important thing. So if you're in a trending market, you only want to trade in the direction of that trend and forget everything else. If you're in a sideways market that's reversing, well, then you want to be reversing those moves and trading smaller and going for smaller profits. Why go for smaller profits? Because when you're in a trading range, moves don't go as far as you think they will, and the profits that you do have will vanish. Kind of like yesterday. If you were reversing any strong moves, it's kind of like this. If you have a bull bar, if you're selling the close of that bull bar, going for a scalp, well, this is all you got before it continued up. The profits you have disappear quickly in a trading range. So I'm just going to go ahead and get an order
submitted
in the market here. I'm just gonna scalp these with the micros. If the range was smaller, I would do like a regular Emini. But when this range is what is this? Almost 30 points. I'd rather not be. I'd rather trade very small, and so I think the plan is I'll try to get like 2 point scalps. Sometimes I would do 5 point scalps, but I don't think the range is quite large enough to do that today. Looking at my example I was talking about, it was like this day. A lot of these moves, some of them did go 5 points, but a lot of them, it would have been better to just go for 2. So the idea is you just go for these scalps, and you'll collect a lot of the little scalps, basically until you lose. I mean, basically until there's a clear sign that the market's no longer doing that and you're wrong, and then there's a breakout against you. let's just say you had just reversed every bar and gone for 2 points. So the first bar, 49. On the first bar, let me see exactly. It looks like you probably would have been able to get out with 2 points. 49 to. So technically, if you were able to enter right at the close of that bar, you would have been out with 2 points. If you'd have 2 points here. You'd buy this close. You have 2 points there. You'd sell this close. Let's just say you got out break even when it pulled back. So you're even there. You make 2 points there. 2 points there, and you'd be able to make 2 points there. So 1, 2, 3, 4, 5. So you'd be up 10 points already. And the idea would be basically you do that until you're wrong, or until the market gives you a read that is signaling that the market's going to do something different. Right, we're just hanging out at this prior day close, hanging out at the open of today, and this is what I was talking about. Like when you have, I think there's a lot of factors today that point to this occurring. We opened near this close, so that means we're kind of already near the fair price. The bars themselves are telling us this is going to happen because these strong moves are being reversed. Then we have a lot of news events that are coming up soon, but have not happened yet. So the market doesn't really want to commit to any strong moves. I know for myself, I don't want to be holding any positions going into like the election or into the FOMC, because I know the volatility could just be crazy. I mean, the market could do anything tomorrow, or on Wednesday or Thursday. So a lot of people will be playing the market today, but they're not going to be holding positions for a long period of time, which means reduced chance of a trend. Let me peek over to some of the other charts. Crude's had this fairly tight channel down, 5 bars down. Probably expect a little bit more down from here. So crude gapped way up, and what it's wanting is to find some sort of bottom. So either a double bottom or a wedge bottom. And either way, it likely has not completed the bottoming pattern. So it probably needs to do more down in this area before it resumes up. So I think crude wants to go up, but it needs to find a bottoming pattern, especially closer to the moving average. So it needs a few bars for this moving average to catch up and for a bottom pattern to form. Gold is kind of doing the same thing the Emini's doing today, where each of the bars are being reversed. Where they do this double bottom that probably sets up a reasonable swing buy there. I think gold is similar to the Emini. It's wanting to find a direction. It's wanting to find a breakout. However, just the context for the day is that probably those breakouts won't last too long. So if you had a bear close, you can see they made their 2 points there. So for someone doing that, they'd have made 12 points already today. So then at that point, they could say, okay, they've made their points, and they could step off to avoid having that, like, to avoid being wrong. Like I said, basically they do that until they're wrong. Well, as we're getting closer to like 11 o'clock, maybe they want to avoid the market transitioning into a different type of market. So I normally avoid trading the open, but I know a lot of people do trade the open. I know a lot of people avoid the open, and a lot of people do trade the open. And there's certain ways to trade the open if you're going to trade it. So there will not be a stream this afternoon. So I'm gonna just go till 11 o'clock today, and that'll be the live stream for today. Yes, I'll be back tomorrow. Might start around like 10 or 10:30 tomorrow, but yeah, we'll be back tomorrow. So we're trying to push up to test this higher. My guess is it probably will get above this, so pretty sure we'll be filled here. And trade small to be able to withstand any sort of like rally that we have up. We'll see if we get filled on this bar. I want to be filled on this bar. I don't want there to be a bull bar that ends and then I have to sell above a bull bar. So I'd rather just get filled on this bar.
Order filled.
All right, so I'm going to go ahead and move my profit to 2 points. So you might have to, might have to withstand a decent sized rally up to like this high or even higher. But my premise is going to remain that we don't expect, strong moves to have lots of follow through today. Trump is almost back up to 60% chance of winning. He was up to almost 60. He was up to like 67% chance of winning, and then he kind of fell down to almost 50. Now he's back up to almost 60. Looks like Pennsylvania is going to be the most important state. It has 19 electoral college votes. And basically, if you account for every other state, like every other state that is leaning towards one candidate, and if you go ahead and give them those electoral votes, then and you just leave with Pennsylvania, then it comes down to Pennsylvania. So at that point, whoever wins Pennsylvania would win the election. So to me, it seems like Pennsylvania is the most important swing state. So I think any small changes in the Pennsylvania odds of winning, like whoever has the chance of winning Pennsylvania will have the better chance of winning the election. So sellers above this bar, if they sold higher, looks like they were able to, maybe some of them get out, break even here. And then sellers of this close, they were able to make their 2 points or 2 points or so. So this is also the breakout of this channel. Like we had a push below. Now we're expecting to push above. And that's what we're doing here. possible wedge pattern. All right, so what I don't want is for the market to come back and test here and then bounce and then start heading higher. So I want to be fairly quick on trying to get out. We can see it came down and touched my order there. And the thinking is, you know, if this market's going to go higher, you don't want to be the you know, there were a lot of short scalpers through here that were selling through this bar, and you know, you don't want to be the last short scalper that's still in your position, because then you get caught if it's going higher. So I think I was a little bit late to the draw there. I think once it touched my limit order, I should have put my stop back down here to get out like a tick, a break even plus a tick, to avoid that risk of it bouncing and going higher. It's a possible wedge here with 3 pushes up. How interested is the market in testing down below this bear bar? I think they want to know what's below that, but at the same time they want to see what's up here as well. So, you know, my chart's starting to get a bit crowded, but we've had several lows that were higher than the previous low. And I think with the context of the market being that we're going to have bad follow through and reversals will be common, I think the market will want to get back down to below this low to see if there are buyers there or if there are sellers. However, at the same time, you know, we had this strong close, this breakout up here, so I think the market also will want to test above there. All right. So now I'm going to just make sure I at least get a tick here.
Target filled.
All right, so we got filled there, so that was just, you know, a couple points. Let's see what the market's doing. These tests back. You know, this is testing this channel line. It's testing, you know, essentially it's testing the moving average. So the market looks like it's trying to create sort of a micro double bottom there. Let me go down to the 1 minute chart and we can show it clearer. So here's the channel line through here. There's one pushback, a second pushback. So we have a double bottom right here. You know, double bottom at these so this is the 1 minute chart now, and we're at the both moving averages right here. So I think in theory that's a swing buy above that. You know, double bottom, So it's a breakout, pullback, double bottom. So it's potentially a swing buy there. Odds are you'll be stopped out, but when you win, potentially you could make 3, 4, or 5 times your risk on the way up. But the context of that makes it weaker today because we are expecting strong moves to fail. So your swing trades will be the odds of your swing trades working out will be less likely. So we have a wedge, but a couple bear bars with big tails on the bottom. Market will probably want to test up a little bit higher first. It's trying to create this double bottom. Probably wants to go a little bit higher and see what it can get when it comes up to this close. If bulls are long here, how many would get out below this bear bar? Not all of them. I mean, it is a wedge, so that's bad for the bulls. I think, with this being at the moving average, I think they realize they'll have more opportunities to see if they're wrong. Like, I don't think it's just going to collapse down right here. It'll probably go sideways for a bit. So probably a lot of the bulls would stay in if it goes below this bear bar. Probably a lot of them would stay in because they don't expect it to just collapse down here. I think we'll probably go sideways, and we'll get more information on if the bulls will be able to have another move back up or if it will fail. So I think they figure they're not going to get stopped out here because they'll have more time to make a decision. You guys will be on for about 20 more minutes. We're gonna end it at 11. So if you have any questions, go ahead and ask before we end the stream. So I think if we get a third bar closing near its low, more bulls would get out below that. And after this wedge pattern, and then now after we have 3 bars down, and especially if with one closing near its low, I think more bulls would be more bulls would take their loss below that. So I think if I had bought through here, and then I was seeing this, and if we do end up closing near the low on this bar, then I would get out below that. So if I was long, I'd be getting out below that bear bar because we have this wedge. So we're expecting a reversal to be happening. We expect a second leg down after this. And now bears have these 3 bars, so they're probably starting to, they're getting stronger. Zach's good morning. So we expect a lot of reversals today. Right, with we have the election tomorrow. We have the FOMC on Thursday. So I don't think traders will be too committed to their positions today. I think they'll probably just try to make quick money. They're not going to hold for anything too long because they don't want a news event to come out and mess up their position. So we expect a lot of strong moves like this to be reversed, kind of like how Friday was. We have this strong move up on the open, but then bad follow through for the rest of the day. And you can see all these individual bars. Strong bull bar, but bad follow through. 6 bars of a sell off, but then sideways for the next 10 bars. Good bull bar, good bull bar, good bull bar. All of them followed with bad follow through. So if I was a bull that bought through here, I would now be out below that bear bar. See this wedge pattern? You can expect to get 2 legs down after that. And so then now that if we had 3 bars, so with one of them closing below its midpoint, I think there's a chance that the bulls feel like the bears are taking over, and that they will get their second leg down. So I would not want to be holding long below that bear bar. Sniper, good morning to you as well. Thank you guys for watching the stream this morning. Not sure if you guys were in here earlier. We did take a short above this bar, and we scalped out here. So we were able to make a couple points so far this morning. Earlier, we were counting all the points that someone could have made if they were just reversing every bar. So like if they bought this bar, bought more lower, sold to close this bar, sold more higher at this close, bought this bear bar. If you just done that the whole way, I think you would have made like 12 points or so by here. I think by 10-20 you would have made 12 points already. And we were thinking that might occur because we have the news that's coming up this week with the election, FOMC. And then we also, we opened within this final leg here of Friday. So we opened near its close. We've kind of been in a larger trading range the last few days anyways. So we probably can expect a lot of reversals to occur. And because of that, I think scalping the open made a lot of sense. Probably, as you see how we have 2 bear bars down here, but then, there's no follow through. It's just a bull reversal. But then off of this, there's no follow through. You just get a bear bar. A couple strong bull bars here, but no breakout. You get 3 bear bars back. I think that's going to occur probably the whole day. And any breakout that does occur, it'll probably reverse. People just don't want to hold their positions very long with the election tomorrow. And the FOMC. There just could be a lot of volatility. So this is Polymarket. It gives us the odds of the betting odds for different events. Most importantly is the presidential election. We can see Trump had he was up to as much as like 67% last week. His odds have since contracted. It was almost 50-50, but then now he's back up to 60%, almost 61. So even just this morning, his odds have gone up several percent. It really doesn't translate to the market until election night. So, I've traded both of the prior presidential elections. So in 2016 and 2020, I traded them both. And in both cases, when Trump's odds of winning went up, the market went up. So it was it was really fun to watch. You're sitting there, you have the news in front of you, and anytime they come out and they say like this state has been called for this president or for this candidate, or the odds have gone up strongly that they'll win this state. So in the last two elections, when Trump was getting the advantage, the market would go up, and then when like Hillary or Biden got the advantage, the market would go down. So, not I would assume it's going to hold true this time. I'm not sure if it will, but I guess the point I'm trying to get to is I don't think the election odds really matter until that night. It's like, if Trump goes up 3% this morning like he has, well, this has been what we've gotten. Versus if it was 3% election night, we would have had a much more dramatic move. So I have a concern for the market, and this isn't something that I can know until it plays out, but um, often the market already knows what it's going to do before an outcome of a news event happens, but it has to wait for that event to occur to act as the catalyst for it to make its move. So my concern is that the market is already planning on going down after the election, and it doesn't matter who wins. But it has to wait for the election to occur, and then the market would drop after that. I don't know. You'll see that with other like news events that are planned. It's kind of like a buy the rumor, sell the news. And it really doesn't even matter what the news event is. It just the market's waiting for that news event to occur for all the liquidity to go into the market, and then whatever it was planning on doing, then it happens. Now, I'm not saying the market's like gonna crash after the election, or I have no idea what it's gonna do, but it's just kind of in the back of my mind a thought. It doesn't, there's a chance it doesn't matter who it is, it's gonna sell off. Like the day and the week afterwards, it might sell off. It doesn't matter who it is. So earlier we were talking about crude needing to make some sort of bottoming pattern. Well, they might be close to that now. And now they do have their wedge pattern at the moving average, but buyers need to step in more here. I think the buyers were fairly weak through here, and we need to see more strength from them before being able to get like a buy. So what this bar is acting like You see how this bar went below and above the prior bar? So that's an outside bar. Market is trying to break out above, and it does have a case for double bottom now with this leg down, then pull back, and then this would be like the second attempt down. I would not be taking that swing buy though. I think we're buying high up in what could be the range for the day. I think your risk is big. You're risking 10 points to buy above that, and it would need to be a swing trade, so you need to be going for a profit that's somewhere up here, and I think there's going to be, even if it does get up here, you're going to have a lot of resistance. There's going to be a lot of selling during that move up, so I would not be interested in buying above that. Yeah, in just the last hour alone, I'll pull it back up here. Trump's at 61.6 chance of winning, and 1 hour ago he was at 58.7, so he's up 3% in just 1 hour. So tomorrow and tomorrow night will be very interesting. This whole week's going to be very interesting. All right, guys, that's all I have for the stream this morning. I want to say one more thing. On the Discord, we have a new section called Big Prize, and on this, it's a competition. So, the competition will be whoever can guess the closing price on Friday at 4:15 of the Emini. So, whatever you think the Emini will close at on Friday at 4:15, put that in by Wednesday at noon. So we just comment your message here, what you think it'll be. And then the closest answer will get a $25 gift card. So it's doesn't cost anything to play, so just go ahead and put your comment in there by Wednesday at noon, and closest answer will get $25 gift card on Friday. All right, guys, thank you for watching the stream, and we'll be back tomorrow morning. See you guys.